Hi, welcome to VCC TV. Today we have with us Mr. Sunil Goyal, founder of YourNest Angel Fund, to discuss more about the India plans and the recent investments and acquisitions. Hi, welcome to the social.
Very well.
So, how do you see the space, the VC space evolving in India over the next 5 years?
We are going through a significant transition at this particular point in time from very less limited number of startup being funded by few angel investors and few VCs. For the first time, this particular calendar year, 2015, is seeing interest coming from various spheres. The talent today from large corporations everywhere, from best of institutions, from McKinsey's, Bain, Microsoft, etc., is now moving out to do their own startup. Simultaneously, there is a funding available. This transition has to be very well handled for us to see a growth over the period of next 5 years. World is evolving at a pace that even difficult for us VCs to imagine. A lot of things are going to be created. We have to give opportunity for new ideas, and the new ideas, we need to have risk capital allocated. Some of the angels will have to treat it as that their monies will be treated like a donation, because the success in the round 2 in India currently is only sub 20% or so. With such a high risk game, only a wealthy or the person who can understand the risks associated with venture capital will be able to grow with it. At YourNest, we've always gone with conviction. We've looked for disruptive business ideas. We are not the ones who are going by the wave that is investment wave that the market is going by. We've stayed away from that. We believe that this could be a long-term strategy for us to be participating in the growth that is going to be there in the next 3 to 5 years. Happily, these talented people who are coming at significant higher cost to startups or VCs in the business, they should be able to create products multiple times their opportunity cost.
And so, how contented are you with government's efforts as far as startups are concerned? There were talks about doing away with the angel tax for these startups and everything. So, how contented are you with those efforts?
We will never be as happy as the government or the ministry poises it to be. It has taken us 3.5 years to get an approval from NRIs to invest in our fund. Today, it's a great thing that the government is going to make it an automatic process. It takes every startup of ours has got income tax notices under the startup tax. It takes the energy out of them. There has to be something done about it. We cannot be waiting to serve to respond to a notice, and when there are 30-40 investors, look at the amount of work entrepreneur has to do to get the data of those 30-40 investors and go back to the income tax officer. What is the source of income of those guys? This startup tax for at least our early stage companies need to be relooked at and very quickly relooked at. The environment of the 10,000 crore fund was announced. It has taken a little bit of time, but we believe it's on a way. Prime Minister is going to be announcing it next week, it seems like so. Okay, so there is some positive sign that we will get capital, which is the most constrained resource from within India, is going to be now getting released. We're looking forward to pension monies, provident fund monies, superannuation monies, all those monies to be starting getting allocated 1%, 2%, 3% to particular this set class or venture capital. At YourNest, we have a core belief. If anybody wants to create a job for his child 20 years down the line, they must put 1%, 2%, 3% of their savings into venture capital or private equity, so that that money helps a job to be created for their kids 20 years down the line.
Now, coming to the more narrower question,
Yeah.
The YourNest point. Consumer IT and tech space has evolved quite a lot over the past 2 years, I would say. Right? How do you see that space going now?
Consumer internet has become a big boys game. the within 2 to 3 months, people are able to get checks of $10 million or so. It is the winner takes the most kind of scenario that is emerging, this thing. And it's a capitalist economy. We have to respect that and we have to allow that to happen. In a game like this, as an angel fund or an early stage fund, we have to be very careful. Whether in a consumer space that we are investing in, there is going to be, in 6 months' time, such parameters achieved that the funding can come in to grow that consumer business. On the other hand, if you're talking about a product platform or a B2B solution, we have little time available with us because funding is not the only criteria that will determine the success. Yes, funding is never a core thing, but timing is the more important one. But after timing, the funding can be little delayed even for B2B business and then can succeed in this thing. Is only the lucky will be able to make it.
YourNest is operating with a 90 crore corpus.
Yes.
Right. And you've made 9 investments so far.
Correct.
Right. How much of the fund have you utilized?
We have already used, you can say, just less than 50%. 50% of the money. But will we do another 9 companies in this one? No. We may end up doing another 5-6 companies, but these 5-6 companies will happen in a period of next 9 months versus 9 companies being done in 3 years. So that's the only difference that will be there. We are in a very advanced stages of discussion with 5 to 6 companies. Hopefully we should be able to close a term sheet and announce those investments soon.
Moving to the other side of the coin. Right. We've talked about investing, now we're talking about exits.
Yeah.
It's been a very good year for YourNest.
Yes.
Right. Starting with Zip deal, acquired by Twitter. Then you had your Northgate acquisition. Now.
Yeah.
Okay. You had the Book My Cab being acquired by Jugnu. Okay. So there have been quite a few exits, investments and all. What are the multiples that you've generated? And what are you expecting in terms of multiples in the investments that you're making going forward? Okay.
First, let me distinguish. Before launching YourNest Angel Fund, I had made personal investment in the 9 startups, and the 9 startups included ZipDial. So ZipDial is a personal. I wrote the first check for that company, and Twitter has not acquired it. Yes, of the 9 companies, I'm now going to be seeing second exit as well in the personal portfolio, which is not yet announced. And another international acquisition is happening. Just 2 companies has given me 3.5 times of my entire portfolio investment in 9 companies. So this is how this can pay off. But I would say I was really, really lucky from that point of view. Yes, you had your intuition play, but it is every time gut and intuition. Will that pay every time? We don't know. But I wanted to work for my investors, 140 investors who have invested with me in the company. Yes, we have 100 crore plus company now. We've had 1 exit, but this is not a cash exit. So Book My Cab is an equity swap with Jugnu. Jugnu is a well-funded, well-run business, and we know their growth plans fairly well. Paytm is one of the investors, and they have deeper partnerships emerging there. So that's how it'll be rewarding for our investors in the fund.
Let's talk about the Northgate investment.
Sure.
Right. Northgate is trying on Series B kind of funding.
Yes.
And YourNest has more looked at Series A kind of funding.
Yeah.
So does Northgate coming in change the whole fundamental of the company?
Okay. The reason Northgate is partnering with YourNest as co-sponsor to this particular fund is they are seeing the startup activity now gaining strength in India. We will say that India is still in the adolescence age and long way to go to the adulthood or a teenhood kind of age. Northgate has read that. They want to participate in the venture space in India. We are going to be their partners for doing so. Whereas they globally, through their tech-enabled investments, direct 100 investments, as well as their multiple tech funds, are looking to participate in emerging global companies from India. The Series B right to invest with them is going to enable to ride on some of those India success stories. So our focus will continue to remain investing 1 to 3 CR in the first round, going up to 8 to 10 CR in the companies that do well. After 8 to 10 CR, kind of investment, Series B, C onwards, we would love to hand over the baton to Northgate to take the co-investment rights or the investment rights in those companies.
Moving to the last question.
Yeah.
Okay, you've explored a lot of niches in consumer and IT tech space. Right? What more niches will you be looking at, and what can be the next, would I say, billion-dollar enterprise, except e-commerce?
At this point in time, we are looking at around, let's say, 4 solutions which are going to be, other than the bets that we've already taken, the ones which are going to be taking in this year. We believe artificial intelligence is here to change the way things operate for us, the machines work for us. That's going to be creating disruptions in every sphere of our life. And hence, anybody with a wonderful, great solution in that area will be going with that. What you have seen in the e-commerce right now is only on the area of B2C. You have not seen anything on the B2B area. The businesses buy humongous out of amount of items. These are large market cap companies. They need goods just like you and me need. There has to be a solution found out that particular aspect. We have millions of retailers who do not understand the dynamics of they do not have the information on the consumers the way the online customers have. We're looking for solutions that are going to give insights to these offline retailers to be able to compete with the online guys as competitively, because they have the 90% of the market even still, or 95% of the market still. I can keep going on. Means there are ideas, these entrepreneurs keep coming by. We've, the recent investments to Golfland is going to be a global company connecting golfers worldwide, making golf accessible. We have Simplified, which is a digital engagement platform, advertisement industry on a digital advertisement industry. There is a huge amount of wastage and leakages. We've estimated $59 billion of money is being wasted of advertisers every year. This company is going to ensure there's a real customer, real audience, and real engagement while you're paying for the advertisement to reach a customer. So it's like these are game-changing theories that we are looking at, and there are multiple new that will come by in the coming years.
Okay. Thank you, sir. Thanks a lot for your time.
Cheers.